Hey guys, welcome to Joy of the Trade. This is my weekly outlook. Once again, we are starting the week with some bullish biases. We're seeing bid in a lot of commodities today. We're seeing gold, we're seeing oil, we're seeing copper, all up multiple percentages, silver up multiple percentages. People are taking hard assets. People are bidding on the rebound in the real economy. The game is getting a little bit long in the tooth in the stock market. That's my tell when people start looking a little bit outside, going into oil, going into copper, going into these things. They're not buying the tech that they've been buying that's led us into this situation with the stock market being so robust. They're buying small caps again. Let me show you something here. So this right here is the QQQ in the yellow line, which is the NASDAQ ETF. This white line here is a Russell 2000, okay? So I'm giving you a 5-year view of this. Even before COVID, when this big drop happened, the NASDAQ was on an upward trajectory. You see that? It was breaking out to new highs, okay? While the Russell 2000 made its high in 18 and was making lower highs, okay? In the rebound, we've seen the NASDAQ go gangbusters. I've been talking about this the entire time. It's been right. I've been making money on it. You know, those that have been subscribing to my money links have been making money on this trend. The QQQ, the NASDAQ is breaking out to all-time highs. And this chart is very constructive, actually. This is a super strong technical chart. It's not overdone yet, believe it or not. It could go a lot farther, but it's solid. It's a solid breakout. This white line here is not a solid breakout. So in the last week, we saw the IWM playing a little catch up, people starting to bid into smaller cap companies, thinking that the recovery would become more broad-based, will expand. I don't think so. I think as this NASDAQ goes, the market goes, I think this is a bit of a Hail Mary type of play. And this is still a downtrending sector. This is still something I'm not constructively bullish on. I'm bullish on this, not so bullish on this. This breaks out and starts doing that, making new highs, different story. But it also makes fundamental sense that it shouldn't be as good. Things aren't as good for smaller companies. Things aren't as good for the less technically adept companies with huge logistics and tons of cash. These companies are borrowing money, the smaller companies I'm talking about, the Russell companies. They have a lot of debt. They've seen their revenues completely fall apart. They're not too big to fail. They have a lot of bad headwinds against them. So another thing we talked about last week that I want to go over that's kind of cool, that's played out exactly as we talked about, was this Kodak trade, right? So I told you guys last week, you get this FOMO, you get these people make all this money. They got a little bit lucky. Government comes out. What was a photograph company, a camera company, turns into a pharmaceutical ingredient company. And then those people who chase it, there's a lot of people that bought this stock $25 and higher, $30. They were getting the shares of these people that were like, yo, yes, I made a ton of money. So these are the new bag holders, I like to call them. This whole new group of bag holders then puked this stock at 15, which we talked about last week. And here we are on Monday with a nice surprise, a 30%er in your face. So it's a teachable moment. You get FOMO, you open yourself up to these massive, massive dumps and hits to your portfolio. So fight FOMO at all costs. It's one of the biggest mistakes you can make as a trader. It's one of the biggest mistakes that happens in trading is this chase trading. It's called chase trading. You're chasing returns. You're chasing a stock. And more often than not, chasing delivers these kind of horrific events that you should really, really try to avoid. Because at the end of the day, this game has got a couple of different results you can have. You can have big winners, big losers, small winners, small losers. If you can really focus on taking out those big losers out of your life, you will do really well. Because like 80% of it is just showing up, surviving, being solvent, having capital, and chasing those types of trades, getting in those Kodaks, getting a 30% in your face, watching an option you just bought go to zero, lickety split, and never going to come back. Those are trades that can wipe you out for good. You get taken out. So avoid that. It's going to be a good week. All eyes on this U.S.-China thing. There was tit for tat over the weekend. A bunch of U.S. politicians got some restrictions to what they can do in Hong Kong, restrictions to what they can do with China, and it's only going to get worse from here, if you ask me. It's not going to get any better. And so let's see how the Microsoft thing works out with TikTok. Let's see what happens with the stimulus bill, which they're still miles apart on, it seems like. I think they're going to pass something, but not before you see some sort of market. They used to call them taper tantrums when the Fed actually raised rates, but there's going to be a stimulus tantrum of some sort. And then you'll see action, but we haven't seen that yet. So keep your eyes on that. Keep your minds right. Keep your game right. Stick with your strategy. Check out Money Links. Check out monthly money flows. Those are my two services. So LFG, I will be back in the middle of the week, all week, with good information for you on the markets. LFG.